Report brought to you by Mike Bjork. Today is Friday. Happy Halloween to you all, October 31st, end of the month. Hey, we got a lot to go over today, so we're going to jump right into it. We're going to start off with the Employment Cost Index. This is an important gauge because this can be inflationary numbers as the cost of companies are costing their cost of retaining and keeping employees. It makes a difference in the economy. So back in the last reporting, we had a 0.7%. It was supposed to come down a little bit in the third quarter, and it came in at 0.7%. So this is something we have to really keep an eye on because obviously the cost for employers is getting higher to keep people going. So again, we do have to be very cautious with this. Personal income, we had a 0.3 back in August, and the forecast is supposed to maintain that, and it actually dipped a little bit. On the flip side, we got the consumer spending, and back in August we had a spike of 0.5%, and forecast was supposed to come down to 0.1, and it actually contracted to negative 0.2%. So not great news right there. And core PCE, this is the Fed's favorite gauge. So when you strip out the food and energy, we got the core, and we had a 0.1%, and basically it's all the way across. So it came in our forecast very low. So the main consumer inflationary numbers are looking good right there, but we do got to watch the employment cost index. That is definitely a concern. Chicago PMI, we had a 60. This is the manufacturing in the Chicago region. So back in September we had a 60.5, and it came up in October. So good news in the Chicago region in the manufacturing side, as well as we got good numbers here for consumer sentiment, where we had 86.4, and it was forecast was supposed to stay the same, and it actually went up a little bit. So people are feeling a little bit better where things are moving towards. So a little bit of mixed bag of news here. Stock market up. Even though we got mixed bag of news there, but a lot of it has to do with the Bank of Japan's increase in their stimulus package today. They kind of rolled that up. Now, the reason why this is a big deal is because, as you may remember earlier in the week, the Fed finished up their quantitative easing and have stopped their stimulus packages. Now they'll be looking towards Europe, who's trying to create packages, and now Japan just did this. So the free money, so to speak, they may not get from the U.S., but they can get it abroad from Japan and Europe. So these are things that they're that could help spur their equity markets a little bit further, as it's kind of free money. So let's see here. We got basically no change in terms of the interest rates today. We ended the day yesterday at 103.15, and we're right now at 103.15. This week has been pretty much just a sideways pattern. We really didn't have any fluctuations, whole lot of fluctuations this week. It's been basically straight across in the same range there. Maybe a change of an eighth or so, maybe worsened by an eighth and improved. So basically from Monday to today, we're basically at the same in terms of pricing. All right, folks. Hey, you guys have a wonderful, safe week, and hope you guys enjoy your Halloween. And stay tuned for next week with more data coming out as we'll begin November. All right, thanks again for watching, and we'll see you guys next week. Take care.